Welcome to the Real Estate Investing Podcast, where we help you unlock your potential freedom through land investing, real estate investing, and entrepreneurship. Hey everyone, welcome back to the Real Estate Investing Podcast. Today's topic, we're discussing how to create consistency through the peaks and valleys of your land business. I'm your host, Steadier Apke, joined again by my brother and business partner, Ron Apke. Before we get into the show, let's go over a question from one of our featured Discord members. Today's question is from David. David asked, what is the legalities for text messaging? Do I need to be concerned or watch out for anything specific while texting for land?
You want to take this one, Dan? I think you've done more of that with launch control.
The short answer is yes, you do, but it depends. So launch control, if you guys are using a legitimate service like launch control, and there's a ton of texting services and softwares out there, we've tested a bunch out. You can check out launch control at landinvestingonline.com/launch control. And the short answer is yes, but if you're using a service like launch control, that was built for legalities. Like if you read their description about us, they were built by litigators, attorneys, and they are constantly changing their laws, and there are things that they have in place to assure that you're being legal. They have a bunch of different compliance things they're doing. That doesn't mean it can't slip through the cracks at all, but that's their number one thing they kind of focus on is legalities with ever-changing laws run in certain different states and different regulations on things. You do need, the short answer to this question is yes, and look at your local guidelines for sure. Consult with Launch Control. They have incredible service. You can message them, I think, like 12 hours a day. They'll get right back with you. They can put you to their legal team. Like they were very, very good. They can get you scripts. They help write scripts. That's a really good service. So go to that website that I showed. If you guys are interested in them, they really help with that to kind of avoid it. It is a little more expensive, but you can scale with them. It's a really, really good software. Other than that, let's get into the show. Today's topic, we're talking about the peaks and valleys of the land business and how to create consistency, because obviously like any business, there's ups and downs, Ron. This business, you can get 2 deals a year with $200,000 profit each. And I mean, talk about the ups and downs of that, Ron. Think about that. So like you can get 2 deals a year and make this business work, or you can have slower, more consistent, which we kind of recommend, and then trick win those massive deals as well. They will come, but we like bigger deals, of course. That just means fewer deals. So it's obviously the fewer, usually the less consistent. So it's very challenging in this business because of that, Ron. You can make $150,000 off a deal.
Yeah, I mean, you can be having a horrible month, and then one of those deals comes in, a horrible week, and then one of those deals comes in. And I think the hardest thing, Dan, with people in this business is the mail thing. Like you can go 5,000, 7,000 mailers without a deal. Unfortunately, like that's just the reality of this business. Then your next 10,000 mailers, you might get 5, 10, 15, I don't know, deals. And like that's where I think a lot of these questions come in. And I think this is a really good topic because I know a lot of people go through these highs and lows, and the lows sometimes feel like they're longer than they actually are, but it just takes one call. You got to attack every single phone call like it's that deal, like it's going to turn your business around, or turn that bad month into a good month. If you have that attitude, you have that mindset, you have the consistency with the mail, it's going to turn around, Dan. Mm-hmm. But mail's not cheap. Like we say it a lot, mail's not cheap, but it is extremely effective, and the ROI on the mail is really, really good. So being consistent with that, I think, is the best thing. But I think it's easier said than done, though.
Yeah, it comes down to understanding how the business model works, like Ron's saying. You can go 5,000 mailers without a deal, but we know about consistency. We know about getting good lead flow. Like we need to put 95% of our dollars into texting, into cold calling, in the mail, whatever our acquisition methods are. Maybe it's a combination of all three of them. Like that's where our money needs to go, and it needs to be consistent. You don't want to be sporadic on that at that point, because if you're sporadic and only send mail once a month, you're going to get leads, coming in for 2 days out of that 30 days. And it just creates less consistent deal flow. Or if you're only sending out once a quarter, whatever your situation is, it's about, you want consistent leads coming in. That's the thing, because when consistent good leads come in, you're going to be acquiring consistently. You're going to be listing properties consistently. You're going to be selling properties consistently. You got to look at it like a deal pipeline. How much do you have in the lead pipeline right now? How much are you buying that's in title? How much is for sale? How much do you have that's under contract on the sell side? And how much have you just sold? And you want it to constantly be balanced on all sides of the business, because those things run through the timeline. And if you have 0, you're acquiring, but you have 5, you're selling, like there's going to be a major gap in your income at some point.
Yeah, and those gaps are caused from inconsistent mail. Like, yes, you can have poor mail results for sure, but those gaps are going to get bigger and bigger if you are inconsistent with your mail volume and you're not sending mail on a consistent enough basis. And those, like I said, those gaps on those lows are going to make it's more difficult because mail is a delayed thing. We're not sending mail today and getting deals tomorrow from it. Like it takes us 2 to 3 weeks to get deals because these are being delivered in the mail, and it takes 2 weeks for them to get to the mailboxes typically. So by being consistent with the mail volume, I think that is the number one thing from not avoiding these lows, because there always are going to be lows, and it can be lows that aren't mail related too. It can be lows and a deal goes wrong. But I think the consistent mail aspect is what I see from minimizing those lows as much as possible.
Exactly, because it all starts on the acquisition side. And that's why we put so much focus on this business of getting properties under market value. That's what we do. Then we buy it, then we sell it, then we make a profit. All of your energy, almost all of your energy, at first, almost 100% of your energy going towards acquisitions, Ron. Stay consistent with it, whether it's texting, like Ron was talking about mail taking 2-3 weeks to hit, which is absolutely correct. Another way to get instant leads, if things aren't, if you're waiting on that mail or you're doing this full time, especially like when you're doing this full time, you can take things to the whole next level, because then you can start texting, Ron. You can start follow-up text. You can start cold text while that mail's out, whatever you're doing. It just opens up a whole nother strategy. And the good thing with texting is it's an on and off button, right? So you can turn it on and send out as many texts as you want. That gets you busy enough. That gets you enough leads. Like it's just a simple formula. Versus mail, it's like you don't really know what's going to come back necessarily. It's more effective. It's been more efficient historically, but it's very questionable. It takes 3 weeks to hit. We don't know what the lead ratio is going to be. We know what typically for texting what our response rate is going to be.
Yep.
So we know how much it's a simple on and off button to keep that flow straight. So that's another, like the title of this is how to create consistency. If you're doing this full time and you have the time to text, yes, it's a lot more work than mail, but it's a good way to create consistency.
And it's what was I going to say? It's mail can be like, you're not going to get as many leads. Texting, you're going to get more leads. Some people like get so caught up in how many phone calls they're getting. I really don't care about that. It's nice getting phone calls, having negotiations, stuff like that. I care about the leads I'm getting. I care about the purchase agreements I'm getting. Texting is going to get you a crap ton of leads, but the legitimate sellers are fewer and farther between in my mind. And it is way more operational in terms of the business. But that being said, both of them can get you really, really good leads. It's just that consistency that's going to, like I've said, minimize those lows.
Exactly. And that's kind of the last thing we touched on is just diversifying, like creating consistency in your business is diversifying your acquisitions. Look at some other ways, especially if you, like we said, if you guys are doing this full time, because mail, like the pros of mail, the best thing about mail is you can scale to $1 million fairly easily with just mail, because you, like Ron said, you don't get that many leads compared to texting. So you don't need a big staff. You get good qualified leads because it's a blind offer and you're closing a lot of those. So it just doesn't take a lot of operations. Texting, just like Ron was just talking about, you're going to get 10 to 20% response rate, which is a lot of messages to go through. You need VAs and acquisition people and get offers out. And they don't have an offer on their plate too. So you got to evaluate their land and get them an offer. It just creates a whole another separate business, but it can be very, very useful. And next thing I want to talk about, since we're talking about consistency, because someone brought this up yesterday, Ron, was the bottleneck of selling land. You want to make sure things are coming, you're acquiring things quick and you're selling things quick to keep a smooth flow. Things start getting caught up in disposition, which can happen, especially as markets start to decline a little bit. And if your disposition's slow, you're going to have a bottleneck somewhere. Your for sale is going to start building up and you're not selling enough, and it's just going to start stacking up and compiling, and you need to focus on selling. It can create a bottleneck there.
Yeah, and not selling properties are going to do a couple of things. Like one, if you're buying the properties yourself, you're going to run out of money. Or two, you're going to hurt investor relationships because you're not selling their properties fast enough or as fast as expected, whatever it is. One of those two things is going to happen, and not selling properties fast directly will reflect your acquisitions, because you will have less money to acquire deals if you cannot get investors their money back, if you cannot get money in your bank to be able to buy the deals, whatever the situation. But yeah, disposition, selling properties is I wouldn't say I'm never really concerned with selling property, because there's always a price someone's going to be. It's when due diligence is done poorly, and we had an episode recently, or something comes up on the sell side, like, crap, this property is half wet, 3/4 wet. That's when it makes me more nervous. I know we can sell properties fast if we buy right And that's all it's about. It's when things come up on the back end that I wasn't expecting. That's what slows our dispositions down, is when there's unexpected things on the back
But
end.
that's because we know the recipe for it too. There's a lot
True.
of people who don't know the recipe for selling properties. The recipe for selling properties is, one, either have a very good realtor. That's number one. You guys can have bad realtors. You might think they're good. You might have a bad realtor who didn't list this. Make sure it's listed everywhere. Make sure it looks good. Make sure they're answering their phones. Make sure they're giving you updates. They need to be good land realtors and know what they're doing. If you're not using a realtor, also, this goes to if you are using a realtor too, you got to make sure you're priced right. Like, that's number one. Priced right with the right marketing in the right places to reach the biggest audience possible. Like the combination, and it's a lot easier said than done, because a lot of people get hung up. They're like, oh, I've had this listed on Facebook Marketplace only for the last, 3 weeks. I'm not getting any purchases. Should I lower my price? I'm like, no, you shouldn't lower your price. You haven't been on the MLS. You haven't been on land.com. Definitely shouldn't lower your price when you haven't been seen by enough people. That's not an indicator. Like, there's so many people who come to us and try to lower the price, especially bad realtors, Ron. It's like, the price isn't the issue. The issue is we're not vetting these leads. Like, we have a bad realtor. We're not vetting the leads. He's not answering his phone, whatever that is. You got to understand where the bottleneck is and really go from there, I think.
We talk about it so much, like lowering the price so you have buyers. But that being said, I bet there's hundreds of thousands of dollars in our community lost every month by underselling properties because it's posted horribly. We just had a situation where we took over a property to sell that was being sold by a manager, and I think it was listed at $50,000. And it just, I don't, the property was posted great. It looked great. I think it was more the response and people responding to the leads or lack thereof. We posted it up for $60,000 and sold it in like 2 days. So I think there's a lot of money. The solution is not always just lower the price. That's why I'm very cautious when telling people, like, the first thing I evaluate if it's a realtor is a realtor. Like, realtors are going to always tell you your price too high. They want their job to be easy. They want to get their commission. You dropping the price $10,000 only affects their commission $600 if it's 6%. It affects you $9,400 if they drop it. It barely affects their commission. So they want to sell it fast and turn it fast because it doesn't affect them that much whether they sell it for $50,000 or $60,000, but it affects you a crap ton. Like, that is a lot of money coming out of your pocket. So evaluate that before you just drop the price.
Exactly. I see it so much, and especially for newer people that don't really understand it. So it is understandable. You just need to everyone brings their deals to the calls, Ron, to go over their deals. Bring your listings to the call and let's go over those. Like that we can start evaluating listings, because we can look at it and be like, all right, this is priced right. You just got to wait for the right offer. If it's a slower market, you're priced right. The listing looks great. You're answering your calls, all that stuff. Might just be the market. Maybe you need to drop the price if you want to sell it quick. But there's a lot of times where a listing will have 40 saves in 2 days or 4 days, Ron, on Zillow. It's blowing up, or maybe let's say it's been 14 days and they have like 50 saves, Ron, because that's enough time to get offers and stuff. And they're not getting offers. And like, that's when we kind of need to step in and say, what's going on with this land when it's getting this kind of traction? It's priced right. Should get an offer probably soon, right?
Yeah, for sure. Like, if it's getting a lot of, like, something else is wrong, you got to evaluate everything that's going on with that. So you don't just lose money. Like, if you're the one selling yourself and you're not answering phone calls or you're not responding or getting these people what they need, these interested buyers, like, that's on you. So instead of lowering the price, fix that situation where maybe you do need a realtor because you don't have time to call these people back.
Yeah.
But evaluating that, I think, can make you a lot more money without even you knowing. You're losing money without even knowing it when you're underselling properties.
Exactly. Last, Ron, just kind of to wrap things up, I think the key to creating consistency to go over this episode is, one, consistently marketing, putting all your efforts, especially at first, all your efforts, get things under contract. Like that, like, consistently get things under contract, consistently send out offers, whether you're texting or mailing or whatever it is. Like, the consistency to mailing goes a very, very, very long way. I know we say it a lot, but I cannot emphasize, like, if you want consistency, you got to do that. And then secondly, be very good at selling properties. Like, we are a marketing company. We buy land under market value and then resell it ourselves. Like, we find a way to sell rural vacant land very, very well. That's what we do.
Yeah, I mean, that is the name of our business. That's why there's so much value in what we do, is we know how to sell things that a lot of people, even realtors, cannot sell. Like, we know how to market land, and we also know how to acquire land via our methods. So those two combinations, being consistent with those, is going to keep your deal flow. It's going to keep it less of a roller coaster and more of a flat line going up, hopefully, in your business, opposed to being a roller coaster and having really low lows.
And we've bought land from realtors that were in realtor contracts before that expired because the realtor couldn't send it. They had a satellite picture. This has happened a couple of times. Realtor couldn't sell it. They had a satellite picture. Their 6-month contract expired. We sent the owner a mail just constantly, like the shotgun approach. One of the people who just had their properties listed is actually still in the MLS. He didn't take it down yet, but they got the mail at the right time. They couldn't sell it. The property was listed for $112,000. We bought his property for $65,000 from him because it was just cash. We could get it in 2 weeks. He was sick of dealing with the realtor. He didn't know what it would sell for. He knew he had it up for 112 grand and it wouldn't sell for 6 months. They kept dropping the price, whatever. So we sent him an offer in cash. That was very appealing to him. We sold that property 137 or 140 grand.
Yep. It was a phenomenal deal. It was just listed so poorly. The realtor was near impossible to get a hold of.
He tried to list it himself.
Yeah, right? Like the realtor wasn't doing his job. It was a one picture posting, and that's what happens a lot of times. We're not saying go after MLS postings or expired MLS
Definitely
postings, but that's just an example of a realtor not doing their job, and just it's not the price. It was not the price. It was the execution of the marketing and the execution of following through with buyers.
Well, yeah, the first step was they priced it wrong because they overpriced it at first. They dropped it to 112 over the 6 or 8 month contract, whatever it was. They started at like 200 or something, kept dropping. Plus the satellite just wasn't getting traction. We sold that within a week. I'm telling you, that just shows like what we do is in marketing. So you want to focus on disposition, acquisition. Those are two major pillars in this business to keep that good, consistent deal flow. As always, thank you for joining. Please do us a huge favor and like and subscribe our YouTube channel and share this with a friend. It really means the world to Ron and I, but more importantly, it could help change the life of someone else. Thanks for joining, and we'll see you next episode.